Hello, my name is Indah Vallentina. Tambunan NPM 214111086. Types and components of financial reports. What is a financial report? Financial statements are a manifest or financial record that occurs within a business. These financial records or statements document the movement of transactions, such as purchases, sales, and other types of transactions that have economic and monetary value. In creating financial reports, typically, these records or manifests are prepared at specific intervals. Various types of financial reports are generally prepared on a monthly or yearly basis. However, there are also some conditions that allow for the creation of financial reports on a weekly or even daily basis, depending on the business's needs. This is done in order to accurately understand the details of the financial condition of the business being operated. The presence of financial reports is, in fact, not only important for business owners. Essential parties, such as stakeholders, also need to be informed about the transparency of a business's financial reports. This transparency is carried out for the evaluation process to develop business strategies for the next period. Therefore, it is important for companies to ensure that the types of financial reports presented have been prepared accurately and carefully to avoid the risk of losses. Types of financial reports. Income statement. The income statement, also known as the profit and loss statement, is a financial report used to assess the financial performance of a company for a specific accounting period. In addition to determining whether a company has experienced a profit or loss, the income statement is also created to provide information about corporate taxes, management assessment of materials, and assistance in decision-making. Statement of financial position. As its name suggests, the financial position report, balance sheet, is a financial statement that shows the financial position and information of a company. In the balance sheet, you will find comprehensive and detailed information about the company's assets, liabilities, and equity. In other words, the elements in the balance sheet consist of only these three accounts. Statement of changes in capital. The statement of changes in equity is a report that illustrates changes, whether they are increases or decreases in net assets over a specific period. At the inception of the company, as the owner of the company, you certainly invest your capital. During its operation, the initial capital will naturally change in line with its performance. For instance, if the company incurs losses in a given period, the capital will decrease. Conversely, if the company makes a profit, the capital will increase. Cash flow statement. The fourth type of financial statement is the cash flow statement. The cash flow statement provides information about the company's cash inflows and outflows. Additionally, the cash flow statement serves as an indicator for predicting cash flows in future periods. Components of the balance sheet. Financial statements. Assets are wealth or resources owned by a company that can be converted into cash. There are two types of assets, tangible and intangible assets. Both types of assets are controlled with the expectation that they will provide some benefits in the future for the company or business. Obligations or liabilities. Liabilities are the debts or legal obligations of a company that may arise during the course of business operations. Typically, a company's liabilities are settled or discharged in accordance with the applicable maturity date through the transfer of economic benefits such as cash, goods, or services. Liability accounts include current liabilities, long-term liabilities, salaries, interest, customer deposits, and other obligations to third parties. Equity. Owner's equity is the difference between assets and liabilities. It reflects the owner's investment in the entity and retained earnings. It includes common stock, retained earnings, and other elements that describe changes in owners' equity from the previous period.